What is liquidity in trading, and why does price so often hunt your stop loss right before running the other way? In this series, we break down the smart money concepts behind that. We start with the one idea everything else is built on, liquidity. Let's get into it. Here's the core idea. Every price level where lots of traders have parked orders, mostly stop losses, is a pocket of liquidity. Big players need those orders to fill their size, so price is constantly drawn toward the areas where the most stops are resting. Once you see the market this way, a lot of so-called random moves stop looking random. There are two flavors. Sell-side liquidity sits below obvious lows. That's where traders who are long place their stops. Buy-side liquidity sits above obvious highs, where the shorts place theirs. So when a trader says price is going to run the lows, they mean price is being drawn down to trigger those sell stops before it reverses. The strongest liquidity forms at equal highs and equal lows, two or more swings that stop at almost the same price. Everyone can see them, so everyone leaves stops in the same spot. That obviousness is exactly why they get taken. When you spot equal highs or lows, you've probably found where price wants to go next. This gives you a directional bias before you ever take a trade. Ask one question. Which pool is price most likely being delivered toward? That is your draw on liquidity. If the lows just got taken, the trapped sellers become fuel to push price up toward the highs. Direction first, entry later. Prop challenge, or leveling up your own trading. Signal Deck tracks every trade in R with quant-level analytics. Prove your edge. Free. Link in the description. Here's a real example on gold. Price grinds down to an obvious low where sell stops are stacked, spikes just below it to trigger them. That's the liquidity grab, or sweep, and then it reverses hard. The traders who got stopped out provided the exact liquidity that fueled the move up. Sweep the stops, then go the other way. You'll see this pattern again and again. So, liquidity is resting orders, mostly stops, sitting at obvious highs and lows. Price is drawn toward the biggest pools, and running the lows or highs is how the market fuels its next move. Next episode, liquidity sweeps and stop hunts, and how to spot the grab as it happens. If this made the charts click, subscribe and keep going.